To it, Julia Lee. Your thoughts, first session of the new year?
14, and although it was a positive one, it was a very quiet session. $1.7 billion worth of stock being traded. The market, though, managed to rise of 0.3%, and we did see gains in most sectors on the market. But I think what was more impressive was the fact that we saw the Small Ordinaries Index up by 0.7%, and I think that's really because we saw the miners bouncing back strongly today. The gold miners had a good day. It was one of the worst areas to be in 2013, with gold prices having the worst year since 1981, but today on the market we did see a very strong bounce back. Silver Lake Resources, no announcements today, but the stock up by a massive 19%. We also saw Newcrest, the biggest stock in that space, up by 8%, and Regis gaining 5.5%. We also saw a few numbers coming out, and on the house price front, it does look like 2013 was a positive one for house prices in Australia, up by 9.8%, and in December we saw a rise of 1.5%. So some of those stocks which are linked to the housing space are doing well on the market, but it's really difficult to read too much into today's performance given the very light volumes we've seen.
Your view on holding gold, whether it be the metal itself or a Newcrest or a Silver Lake, a Laser?
Well, I think during the global financial crisis, the reason why gold was in such high demand was this flee to safety, and also we did see zero interest rate policies over in the US, which meant that if you were carrying gold, there was no cost to doing that. And then, of course, the money printing that we saw in the US with quantitative easing. Gold, the supply is relatively constant compared to the supply of US dollars, which we saw after the global financial crisis, which was in rapid increasing supply. And we are seeing a bit of a reversal in those conditions. One, we're seeing the US dollar strengthening, we're seeing the longer term bond rates going up, and of course we're seeing tapering. So if we have a look at gold prices, and if I can just bring up a chart, this is gold prices traded over in New York, and this is a 5-year chart. You can see that the trend is quite clearly down, and there isn't signs that we have reached a bottom yet. So there is still more downside risk in terms of gold prices in the medium to long term, especially because of the strength in the US dollar and longer term bond yields continuing to rise, as well as tapering over in the US. So I think if you are interested in gold, gold may present opportunities in terms of short-term trading opportunities, but I think in terms of the medium to long-term outlook, one of the key themes of 2014 will be the strengthening in the US dollar, and that's bad news for gold prices.
What's it good news for then, Julia? I mean, if people are sitting around thinking, okay, how do I want to position myself medium, longer term sort of gains, what would you, for yourself, be looking at?
Well, the strengthening in the US dollar is fantastic news for Australian company earnings, and that's because so many companies listed on the ASX make most of their revenue from offshore. So overseas revenue plays a big part in it, and of course the weakness in the Aussie dollar means that once they translate that overseas revenue back into Aussie dollar, it is more. And we've already seen that impact on stocks like James Hardie up by 45%. We've seen the healthcare stocks doing well in 2013. Amcor's up around about 43%. And we've even seen BlueScope Steel up by 68%. Now, we did see some manufacturing numbers out today, and we did see a bit of a softening off in the December numbers. But that lower Aussie dollar should also be good news for those companies which are involved in manufacturing, such as BlueScope Steel. So I think the Aussie dollar is going to be a key theme in 2014, as it was in 2013. In 2013, we did see the Aussie dollar down by 14%, but I think we will continue that weakness in the Aussie dollar continuing because of what's happening in terms of the US, the strengthening US economy, as well as tapering of that quantitative easing program.
Julia, Happy New Year, by the way.
Happy New Year, Martin.
Thank you. Look, on the Aussie dollar, it's really interesting because I think I agree with you. That's going to be one of the really big drivers for the market this year, and certainly on the earnings side. So on your charts, how oversold is the Aussie dollar in the short term, and in the more medium term, where do you think the Aussie dollar is going?
I guess it's quite interesting looking at the Aussie dollar on a short-term as well as a long-term basis. And this is the Aussie dollar against the US currency today. You can see that we've seen a bit of an uplift in the Aussie dollar before seeing a bit of a downturn from about 3 p.m. We can't read too much into the short-term chart at the moment, and that's because of the low liquidity that is around because of the holidays all over the globe. But if we have a look at a 1-year chart of the Aussie dollar, this is what it looks like, and you can see that very firmly that trend has been down. Even within that 1-year trend, you can see that we've seen some medium-term trends coming in there. But if we have a look at a 10-year chart of the Aussie dollar, you can see that there are some very clear clear trends that emerge. After the global financial crisis, we saw a rise in the Aussie dollar, and then we saw a bit of consolidation, and you can see that the trend is lower at the moment. So while there will be some shorter term opportunities in terms of the Aussie dollar, you can see that the trend is down, and the trends that emerge in the Aussie dollar, the long-term trends, do tend to be multi-year ones. So we're in 1 year of a downward trend in the Aussie dollar, and we're expecting to see this to be a multi-year. We're expecting this to be a multi-year one.